Hey everyone, good morning. We're going to take a look at Under Armour today. I'm going to look at the weekly and the daily chart, and there's a very interesting Elliott Wave pattern on the weekly chart that implies a big move coming. So let's dive in and see what that's all about. Okay, we're going to start off here with the weekly chart on Under Armour, and as you can see, this is all the data I've got in here from 2006. And it comes all the way up through today. And today is June 1st, first day of June 2016. So what we've got here is this would be the data on the weekly chart through last Friday, May 27th, okay? Now, this is the low, the all-time low that I've got here, and I think it was $1.58 on an intra-week basis. And that was March 2009. And then the high is back up here in September of last fall, September 2015, and an intra-week high of $54.70. So the stock is up from intra-week high, not intraday, intra-week high to intra-week low, up 35 times in a, 6.5 year period, something like that. Pretty good run for Under Armour. Now, my wave count shows intermediate wave 1, 2, 3, 4, and then it started extending and extending. And so we have an extended fifth wave here, okay, that came all the way out in here. And it's a really nice wave picture, really nice wave count that comes out. And now it looks like we are doing a first pullback A and then a second pullback B. And I'm looking for a zigzag. Now, here's the thing about fifth wave extensions. This is what you call a fifth wave extension. When stocks extend like this, or commodities, the expectation is that the correction will be fairly sharp and fairly significant and come all the way back down to the low of wave 2 in the fifth wave. Now, where is that? The low of wave 2 in here is $11.45, let's call it, okay, for wave C. Now that's pretty dramatic. I mean, we're talking about a stock that closed last Friday, $37.92. We're talking about pulling down all the way down to, $11.45. Now I admit that's pretty dramatic, but guess what? I mean, even pulling back to that, you're still above the high of 2007 before the huge financial crisis that occurred. The stock has just had one heck of a huge run. So, this is not something I'm just kind of making up. This is a classic pattern. Whenever you get an extended fifth wave like this, that's the kind of pullback that you're looking at. Let's take a look at the daily chart. The daily chart here shows where A came down, and this is a big three-wave move with B, and clearly it started to break down in here. We had this little pullback. There's support in here at the low of 36.33. And it came down to, on the 18th to 36.20, so really right in that area, let's call it 36.25 or so, that it is getting support. Well, now it's rolling over, and today, okay, so here's the current data on Under Armour, and here's the current chart, and you can see this low here, 36.20, was broken today as it gapped down. And Under Armour, I guess, has revised down their revenue projections and profit projections and things like that. I haven't caught quite all the news, but the break is coming down in the expectation and just like what I'm looking for in terms of a continuation of this move. And by the way, this C move down is going to be a five-wave move. So that's what I'll be looking for, is five distinct waves down as a part of C. And so that's the picture. Let me go back one more time. That's the picture on Under Armour. And, again, it's had a big run, 5 waves and the extended fifth wave. Okay, if you found that video helpful, make sure you subscribe or subscribe. See you on the next video.